Welcome back, you guys, to Small Step Finance. Here at Small Step Finance, we're here to help you build your wealth one small step at a time. Now let's dive into learning about things you can do to prepare for a recession and things that you can do to make sure that you are able to manage your money and your finances in the best possible way. We're going to dive into 7 things that you need to do to prepare for a recession. First, what you need to think about is understanding what you're spending your money on today. It's critical that you sit down and spend some time reflecting on where your money is going day in and day out. Once you set up a budget and you look at where your expenses are for the last 3 months, you'll get a better picture of where your money might go in the next 3 to 6 months. When you're looking at those expenditures, you need to think about what areas you can cut out from your current budget and if there's areas for you to expand upon saving your money. Sliding into step number 2, you need to think about your savings. Take a minute, look at your savings accounts, and have a good understanding of whether or not that's going to be enough to hold you and carry you during a recession. During recessions, people often lose their jobs or have their hours cut. The money that's sitting in your savings account right now, is that going to be able to serve as an emergency fund if you lose your job or you have a pay cut? You need to think about those things today, and you need to start planning and preparing for those things today. Now, when you think about savings and an emergency savings, ideally, what I always recommend is to start with $1,000 as your target for an emergency savings and build from there. So if you already have $1,000, start thinking about, can you build it to a place where you have 1 month or 2 month or 3 months worth of savings from your income that can help carry you in the event that you lost your job for a few months. You don't want to have to be in a place where you have to rely on credit cards or loans to be able to pay your monthly expenses because you did not set up a plan today to make sure that you're ready in the event of a recession and in the event that you lose your job or have your hours cut. Speaking of credit, did you know that step number 3 is all about credit? You need to spend some time looking at your credit score. What does it look like today, and is it in a healthy space? If it's not in a healthy space, you need to start taking some steps today to make sure that you're preparing your credit for tomorrow. When looking at your credit, you need to be able to understand that a higher credit score will actually give you better and lower interest rates and allow you to take out more money if needed in the future, even if it's for purchasing something from a store on a store credit card. You need to be able to make sure that your credit score is at a healthy place. And here's a couple things you can consider to help get yourself in a better credit situation. First, you want to make sure that you're paying more than the minimum amount on each of your credit cards. Second, you want to make sure that you're not missing payments. They must be made on time. Third, you want to sit down and you want to prioritize how you're going to pay down the existing credit that you have. So as you're thinking about your spending plan that we talked about in step 1 and thinking about bolstering your savings in step 2, step 3 is looking at, can you take money from your spending plan, from your budget, and allocate some of that money towards paying down some of your debts so that you have a higher level of credit available to you, which also will allow you to have a lower interest rate in the event you must take out credit during a recession. For step number 4, this only applies to you if you have student loans. Now, if you have student loans, you've probably heard about all the news about whether student loans may be forgiven or be pushed out even further. But really what you need to think about is when you have to start paying your student loans again, are you going to be prepared? And what happens to you if it happens during a recession and you have less income coming in the door? You need to think about that strategy today, and you need to think about, can you afford your minimum payment on your student loan if you are required to make payment? That is what you need to think about as you're building out this recession-proof money plan for yourself. Step number 5 is all about your investment strategy. Now, I get people asking all the time, what should I do with my investments? Now, this question gets brought up even more when there starts to be a downturn in the stock market. What you need to think about from an investment perspective is to keep on buying your investments month after month and keep on building that portfolio. It is now, during the time when recessions are occurring, that millionaires are made because people are frightened and they're afraid, so they move their money out of their investment accounts or they stop contributing entirely, and they lose out on the opportunity for the growth to occur. Just for your perspective, imagine the S&P 500 drops 20%. In order for the S&P to recover that 20%, it actually has to grow by 25%. So if you're buying at the lowest point, you're going to see a gain of 25%, whereas someone who had previously been investing would only see a drop in 20%. Now, what does that tell you? Should you be timing the market? No, you shouldn't. You should continue to buy month after month. It's the investors who continue on their investment strategy who have been proven to have the best and most successful financial plans in the world. This has been studied by multiple large brokerage firms, including Fidelity. Step number 6 is really about your housing. You need to make sure that you have stable housing now through the recession until after the recession is done. You need to make sure that you have enough money coming in the door every single month, even if your bills needed to be paid and you had less income coming in the door. Now, my encouragement for you is that if you've been able to afford your home today, you likely are able to continue into this period and be able to continue paying your bills. But for some people who may be either overextended or living in tight money situations, their housing is going to be a complicated situation when the recession comes and they have to be able to afford paying that monthly rent or that monthly mortgage. If you're one of those people who either is living on the edge financially, you need to start putting plans in place today to ensure and secure your housing through the recession, irregardless of your financial situation from your employment. If you don't already have other sources of income to support your mortgage or your rent, you should be thinking about building those right now. The 7th step that you need to think about as we enter and prepare for a recession is what you can do from an income perspective. Now, we've talked about budgeting, we've talked about spending, we've talked about your credit score, your housing, investing. Now it's time to talk about income. If you have one source of income, you are likely to have a higher risk of losing some of that money in the event of a recession if your job is no longer paying you. You need to think about how you can build other sources of income. For example, if you're able to build a dividend portfolio that you can tap into during a time of recession where you may need some extra money or cushion, that is one opportunity for you. Another option is building a side business, such as something related to a hobby of yours where you're able to monetize it through social media or through Etsy or through some other means. What's important for you to consider is how you can find other sources of income that can help support you through a rough patch. Relying on a single source of income is going to be risky, and you need to think about how you build your income sources so that you have other opportunities paying you down the line that can help cover your bills. Now, we've walked through 7 small steps that you can take to prepare yourself for a financial situation as a result of a recession. I want you to think about what are some things that you might be doing that I did not share in the video, and drop them in the comments below. Be sure to subscribe to my channel, and I want to remind you, we are always here to help you build your wealth one small step at a time, and I can't wait for you to check out my next video. Thank you so much.